Joining me now to help set up the action today is Jonathan Corpina, Senior Managing Partner, Meridian Equity Partners. Jonathan, it is so good to have you here with us. Good morning. All right, let's start out with the week ahead. We got into this, it seems like the focus will be tech and trade, but obviously there's more to chew on the earnings front. What is the roadmap for this week?
Yeah, some good news, bad news here. Last time I was on the show about a month ago, it feels like we're still talking about the same thing, which is good news because we haven't really been derailed too much, and it's bad news because we haven't gotten any real new information. So what are we going to do? We're going to kind of go back to the basics. We're going to look at the economics. We're going to look at earnings report and season coming out here. We're going to try to hold on to that. Clearly, earnings season does add a little bit of boost confidence into the market here. The report's fine, we'll listen to those, but it's going to be really the outlook moving forward, how CEOs and CFOs plan to manage in this kind of uncharted territory where we're at this pivot point on interest rates. Do they start coming back in or not? How tariffs come into play. We've seen a few deals, quote unquote, come into play, waiting to see how others are going to play out and the implications of that. So we're in this kind of like weird territory as we are right in the middle of the year. It
feels a little tenuous too, especially when you think about some of the quarterly report cards we already got, for instance, with the banks. And the banks have had quite a run up so far this year, but you didn't see, strength off the back of them reporting and projecting better numbers. Is that part of like what the churn is?
And that's part of managing expectations, right? Still this unknown of what things are going to look like moving forward. We haven't gotten any real solid information on tariffs and trade deals. We're still teetering back and forth on what the Fed is going to do and how they're going to do it and when they're going to do it and who's going to do it, right? We've got this banter back and forth between the Fed and the White House as to positioning. So there's a lot of unknown and uncertainty that's going on here. Put that all aside, the market still continues to shrug it all off and tick higher and higher, which is good news, but let's not panic if and when we see this slight pullback in the market. If you just look at today's activity and coming off of last week, look at the VIX this morning. VIX is up here trading higher this morning. A little bit of a disconnect in the sentiment in the market, so we're going to see this market continue to move higher, but there's going to be some sort of catalyst, and maybe it is going to be an additional pause by the Fed. We're waiting for something to come out. Or maybe we're going to have some trade deals that don't come to fruition or get punted down the road, which will add some uncertainty and a little bit of fear to this market. Might see a little bit of a sell-off as the end of the summer comes along.
I can't see the Fed doing anything this month, and I know that's kind of where consensus is. Is momentum still favoring the bulls?
It is, and it feels like it, right? I mean, look at the April lows to where we are now. The market always shrugs off this bad information and this bad sentiment to get us back to where we are today. The movement and the volatility that we've seen in this market over the last 5 months is incredible.
It is. I mean,
really
it's
is
incredible, like, to see where we were just a few months ago, honestly, and where we are now. You would have thought that when we look at it in hindsight, it feels more like a speed bump than a giant pothole that needed to be kind of repaved and, some kind of structural issue.
And it's somewhat similar to where we were last year. Just go back to exactly where we were last year. We were talking about interest rates, and we were running up into the election, right? And the market was starting to get a little bit momentum. August of last year, we had a international bank crisis, so to speak. VIX hit 65. We have this massive sell-off in the market, 3 or 4 days, and then little by little, it kind of comes back. I think we're going to get a summer headline down the road at some point.
On trade, meaning?
On trade, on anything. It really could be anything at this point. I think the market's waiting for that headline, whatever that headline's going to be, and we could see a sell-off in the market. But once again, we've had such a nice run-up in the market. You got to keep it all in perspective of where we were, where we are now. And if you get a 1, 2, 3% pullback, it's still,
that's not bad.
It's still in a good position that we've been in.
Yeah, I mean, compared to, especially what we saw in April. What do you think about the rotation trade? We've been seeing more flows going into, say, defensive and just beyond tech.
Yeah, well, I think we're going to see with the earnings reports coming out with the two of the Mag 7 starting this week, we might see that rotation back into tech if we start to see this continue to happen. We saw the rotation go into the financials ahead of earnings, as they normally have, with the volatility and volume that we've seen in the market here, knowing that those reports were probably going to come out positive. But I think at some point, again, punt this down the road to August, September, we might continue to see that rotation back into the defensive stock, as we get towards the end of the year.
Okay, I mean, that makes sense. I think obviously there's still a lot hanging on tech. Alphabet, Google has been an underperformer within the Mag 7. But let me ask you, when you think about the bar set for earnings this quarter, it feels like it's higher than the previous quarter. Does that make sense?
It does, and kind of every quarter has been a little bit higher as far as the expectations are concerned, just because the bar was set low. We've reached over those bars considering the headwinds that we've had, and those headwinds are still here, right? We're still, again, talking about interest rates, we're talking about trade issues that are continue, or geopolitical issues that have gotten very quiet but haven't gone away, right? So I think the expectations continue to get higher and higher. The market seems a little fragile to me. If we don't meet those expectations, we can get a pullback here.
Okay, and then for our retail investor audience, we have a lot of retail investors who, how do you manage a week like this where you still lack clarity on the trade front, but you do have something to chew on?
Yeah, you got to take a step back and just look at longer term. If you didn't panic in April and May and June, you're kind of hanging in there and doing okay. I think on a long-term basis, the conversations of interest rates, the conversations of trade, just go way back. We were talking, the big headline before COVID was trade and trade deficit.
Right, that's true.
And that's what, and we're going to continue, we're going to continue to talk about that. So I think you got to take a bigger picture of what the market and what the economy is going to do. Going to be interesting just kind of how we move through the next few cycles, the next few quarters here, because we are going to have to see some trade deals. We're going to have to see some movement from the Fed at some point, and how the economy reacts to that is going to be very important.
Okay, very interesting road ahead. Thank you, Jonathan.
Thank you.
That's Jonathan Corpina, Senior Managing Partner, Meridian Equity Partners. Our thanks to Jonathan.